All right, guten Morgen. Como allez-vous? How are you? Good morning, everybody. Welcome to Forex.Today, the YouTube community of more than 20,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades. Why? Because trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. We plan our trades in advance because we are trying to lower our risk first and foremost, and then maybe improve our results. Anyways. So my name is Wayne. I will be your guide, but you will be the leader in today's session. I know a little bit about economics. I have a degree in that, so you can ask me stuff related to finance and banking. Also, finance was part of my master's degree, so you can ask me about that, which is great. I like trading the markets. I'm a macroeconomic trend trader. I believe because quadruple witching is today that we have sort of in-between moves. Because the real move is going to happen Wednesday. So what do we do now? So we'll go through the markets. We'll look at gold, oil, and Bitcoin. We'll look at dollar pairs and yen pairs. But really, whatever you want to do, I'm fine with. I'll let you lead the way. In the description below the video, there are many links. There's a link to my book, Strategic and Tactical Forex Trading. It'd be great if you could leave a review on Amazon.com. You could buy it new, you could buy it used, I don't care. There's nothing in it for me at all. You can do whatever you want. Buy a new one, buy a used one, whatever. But leave a review. That would be great. You can visit fxbootcamp.com. That'll teach you how to trade properly. Technical and fundamental analysis is covered every which way but loose. $88 gets you 88 hours of videos. And access to special events. We're going to be doing a special event soon. Actually, soon. I probably only have a week to put that together. It'll cost $11. You're like, $11? It used to cost $10. Well, inflation. Inflation, bro. I'll put a coupon code. Maybe it'll be $10.60. Yeah. Anyway, so we got that coming up. So you should be a member of FX Bootcamp for that. Whatever. Cool. There's a new link to a new service called QuantBox. Yeah. There's a description in the below the video all about that. There's a trial for $7.90 for a week. Cool. Check it out. And there is a link to tradersway.com, a boutique foreign exchange trading firm that would like to earn your loyalty and respect like they earned mine. Okay? They're a good broker. You should try them out. I recommend them. You want to go? Oh, and I hope you're wearing green today. Yeah, this is green. I'm losing light in my office for some reason. I don't know what's going on. I don't know what's going on. It's dark in here, and my webcam light is on full blast. I don't know what's going on here. But anywho, hope you got your green on for St. Patrick's Day. So happy St. Patty's. Right, got your lucky green on. Hopefully we have green on the screen, huh? Okay. Oh, Trucking Mogul likes the polo. You know, it's old. You're like, look at that, dude. It's vintage. Yeah, it is vintage. I'm right now at my high school weight. None of my clothes fit. I'm wearing clothes that are 30 years old. None of my clothes fit. Yeah, it's really an oddity. So, yeah, strange. So it's old. It literally is faded, and it's tiny. It's tiny, but I've dropped so much weight that yeah, I got to wear my clothes from high school. Well, style always prevails. I wouldn't call dressing like I'm in a Seinfeld episode necessarily stylish. But that's okay, because when I try to dress stylish, I look like I dress like Ellen. But when I wear my throwback clothes, I dress like Jerry Seinfeld. So Ellen or Seinfeld. Frankly, I look better when I dress like Ellen. Yeah. I want to be like Christine Lagarde, but I'm more like Ellen. Yeah, the pirate sleeves. Anywho, I was trying to find this day. You know, this is what I do, by the way. So I'm on the People's Bank of China website. Now watch this. Watch this. Go to pbc.gov.cn/English and check this out. There's actually a page called English. Isn't that funny? They're like, wouldn't it be funny to call it English and then none of it's in English? Okay. So anyways, you got to go up here. Boop. Anyway, so we're here, and I couldn't find the data. They don't update it as frequently, I think, as the other, as the Chinese version. But the thing is, they dropped their RRR. That is the reserve requirement ratio, which is a form of stimulus. So maybe Chinese ADR stocks are going to be up. Okay. Look at this. Low interest rates, increase in money supply, keeping the exchange rate around 7. But I couldn't find the change in RRR over here. Don't worry, I went through the press releases and stuff. So you'll have to verify it somewhere, just not there. Okay, so the reserve requirement ratio is the amount of money a bank is required to keep on deposit at the central bank. Now think about it. If the money is at the central bank, you cannot loan it to a customer. So if the central bank lowers the amount you're required to keep at the central bank, then the commercial bank or the retail bank now has more money in their bank to lend out. So it's a form of stimulus. Okay, and if you want to figure out how that impacts fractional reserve banking, You probably are thinking already about the formula 1 over R plus E. Okay? And what's happened is R is down, which pushes E up. Okay? And if you're like, I don't know what you just talked about, what do you mean 1 over R plus E? Well, then you've just been red flagged, my friend. You have not taken the economics course, the monetary policy course at FX Bootcamp. It's something like 12 hours long, so it's detailed. And if you just didn't understand the 1 over R plus E, you don't know how a bank works, and you don't know how the central bank works. You don't know how fractional reserve banking works. You don't know how these changes by the central bank impact the economy. And therefore, you don't know nothing, son. So giddy up. $88 solves your problem. I'm a foreign exchange trader, but I don't know anything about banks. Cool. Guten Morgen. So things are kind of all over the place. I believe we're all waiting till Wednesday. So whatever you're doing on your 15-minute chart, you're like trading a ghost, I think. I don't even know if it exists, whatever you're doing on a small time frame. For example, what's actually happening in the market might be this. And that is the next, let's say 7 to 10 days. Meanwhile, you're making and losing money inside of a candle that hasn't produced a higher high or a higher low. So you're making and losing money inside of here. Okay. And on a high time frame, nobody can even see you. They don't know you exist. So anyways, be careful. Okay, so we'll mark all these. That's fine. So it seems pretty reasonable. We've printed the bottom. And I know today's Friday, but by next Friday, maybe we're up here testing 140. So if you're like trading inside these smaller candles, you're getting caught in noise. Remember, what's important right now is the Fed meeting. Actually, it's not the Fed meeting. It's the interest rate decision the Fed makes, right? No, it's not the interest rate decision the Fed makes. It's in the press conference and what Jay Powell says. No, it's not what he says, although that will impact it. And I'm interested in how he talks about Silicon Valley Bank. But that's not the real fundamental issue. That's just sort of the emotional, political, in the moment. Okay? Kind of new. That's kind of just news, but it's not fundamentals. So why do we care about the Fed meeting on Wednesday? Richard says forward guidance. Okay, well, can you be more specific? Anybody? See how the Fed Watch tool changes? Yeah. Yeah, but it's more like what will make it change. Now, Richard says about the future direction of policy. Well, I know what forward guidance means, but where do you get that information? Like, what specifically? He's not going to tell you. Okay, Henry's getting there. Okay, terminal rate. Where do we find the terminal rate? He's not going to tell you, but you can get the information. And that will move the FedWatch tool, but the FedWatch tool is a consequence of this. The dot plot. Where do you get the dot plot? Henry is correct. Now let's get more specific. By the way, I covered all this in the swing trading group last night, so if you're in my swing trading group or my day trading group, you're already wicked smart. Because we went through this yesterday and looked at the previous dot plot. But where did I get that data? The summary of economic projections. Okay? Will the Fed raise in this environment, though? 80% chance. They raise by 25 basis points. So very often people say, oh, it's priced in. And what they mean is they don't know. And they explain everything with the answer, I don't know, you can't predict the future, everything's random. Or, it was already priced in. Now, the real answer is, when somebody says, well, what's the chances they actually hike? With the Silicon Valley Bank and First Republic and Signature, like all this going on. Well, what if they don't hike? Well, I looked at that. I looked at that last night in the swing trading group. We pulled up the math. We looked at the math based on how banks are pricing future levels of debt. And you reverse engineer based on the price they negotiated. And you can see there's a 20% chance the Fed pauses, an 80% chance they go by 25 basis points, and a 0% chance they raise by 50. Now, that was different than a week ago, and it's likely going to get a little bit different by the time we get to the Fed meeting. But at least when I say it's an 80% chance of 25 basis points, I can tell you how I got that data. So I'm specific and not sort of generic, like, I don't know, it's all priced in. Huh? When people say things like that, usually it makes me think of a painter. You know what a painter's job is? To make everyone else's sloppy work look good. So they patch all the bumps. They patch all the holes. They patch all the the cracks. And then once they've patched it all up, they paint over everything and it looks good. I don't know what's going on, but everything's just priced in. There's no way you can beat the market. See, people will tell you two things. You cannot beat the market because everything's already priced in, and therefore there's no arbitrage, or everything's random. So you just diversify. Okay? And here's the interesting thing about that. If you're diversified, you won't get filthy, stinking rich. We were kind of talking about this last night too. People will tell you you should live a balanced life. And that would be less stressful, for sure. But you probably won't be filthy, stinking successful. But you can live a Buddhist monk life, living in the forest, listening to the trees whisper and the river laugh. like Siddhartha. And you can live that guru life. Oh, you'll be at peace. But you won't get rich. So, yeah, you can live a balanced life or you can live an unbalanced life. It's your choice. You got to pick your battles, right? Pick and choose your battles. So, anywho, it's all priced in or everything's random. So why even try? So I'm a dollar bull. I'm a dollar bull and I'm okay. I trade all night and I sleep all day. I wear high heels and a bra. There we go. All right. So we had a plan yesterday. Actually, this is me expanding on somebody's plan. And let me show you, because you're like, this failed. No, it didn't. So I'm on a 5-minute chart. And what we did is calculations. If you are a bear, how do you set up a trade? This chart doesn't tell you to be a bear, but if you're a bear, how do you set up a trade? Okay? And so I talked about that, and I went, okay, you take this, and then you take that, and then, you take this across, and all that kind of stuff. And in this case, I'm using Fibonacci, and then it double bottoms here. So then you do here, and then you create a zone in which you'll consider selling. And so you look at the 62 handle, and you're like, if it rolls over at 62, then I'm taking it down. It's an if-then statement. I'm on a 5-minute chart. Do you see a trade around 62? Nope. It worked beautifully. Plan B was the triple top. And on this 5-minute chart, you do have an entry. You can get short this if you want to. Right? In your head, you are selling. Okay? And on this time frame, you have tippity-toppity, 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 lower low, lower high, roll reversal. Oh, Lucas, you're on it. Nice. Yeah. So in this case, you have a triple top, lower low, roll reversal. Oh, God. Okay. Up, 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 down, down, up, sell. Cool. Do you trade demand and supply zones? Now, that smells like somebody else's talk, but it really sounds dumb to me. I'm not saying you, Richard. I'm saying whoever is teaching that, there isn't any other way to trade. It's like you're asking me if I breathe air. Yeah, I recommend that too. What else is trading? So, with that being said, I don't know the language you're talking. It's somebody else's language. And so I don't know how to answer that. But it's a weird question to me. But I know there's some other guru talking that. But how else would you trade? Okay. Demand and supply zones. So you're probably it's probably someone's description of price action. And, probably everybody talks this way, right, Richard? But you got to understand, I've been trading longer than all of them. So I know now when you type in Forex, you have 1,000 people like me you could watch. And they probably all use similar language now because they've all learned from other gurus and all that kind of stuff. But when I started, there wasn't any other gurus. I'm like one of the first speakers at FX Street. Like, yeah, I was the keynote speaker at the first Forex conference in the United States. Like, so I don't speak that language, right? So I chuckle at it like, well, what the hell else would you do if you're not buying in demand zones, right? And selling, it's just like, I don't get it, right? But whatever, it's someone else's description and I don't understand the language. So I can't really comment. But I'm sure it makes sense. It can't be that dumb, right? So it's just, I don't know. Supply and demand, right? So you would sell at resistance, which you might call supply, and I might buy at demand because that's where you would buy, right? Yeah. So I don't know. Yeah. So Richard, do you breathe air? What do you think of oxygen, Richard? I like it. I like it a lot. Yeah. Oh, me too. Yeah, of course it's just really supporting resistance. Yeah. So, but then you got to buy somebody's course. But Lucas, you probably like nitrogen and phosphorus more than most people in the chat. They have no comment. Who's got the best potassium? Not Kazakhstan. Wherever, right? Where, yeah. Yes. Kazakhstani potassium is inferior. So anyways, so look, let me answer without being so facetious. Do I like buying at this level? No. Okay. Do I like buying at this level? Yes. Now, here's the interesting thing. Do I like buying at this level? Yes. Under one circumstance. Actually, two circumstances. I've changed the time, but not the price. So at this time, I would not buy this at this price. But if there was a change in market conditions in which we went up and then we came down, okay, then we would be back at this price, but at a new time. And under those market conditions, I would buy it. Because it went from a supply zone to a demand zone, if that's how you want to talk about it. Yeah. Yeah, but Bern, do I need to package it different? I'm open. Hey, Bern, send me an email. Tell me what I need to do. I'm okay with that. But I'm not going to give rah-rah speeches about trading more. But that's okay. But let me know about the message, whatever that is. Okay. Because what I have found, and I found this in the early days, if I make these streams about trading instead of education, absolutely nobody learns anything. Nobody learns a thing. So, do I care about 10,000 people listening to me trying to figure out my signal? No, I actually couldn't think of anything more boring. What do I care about what other people do listening to me make decisions on their behalf and not pay me any money for it? Like, I don't care, right? You see what I mean? Like, it's just dumb to me. And, you know, I'm not picking on you or them, Burton. Don't get me wrong. But I'm just saying, like, to me as a human being that wakes up in the morning, breathes air and says, what should I do with my life? Getting 10,000 people to follow my signal on YouTube sounds like a total waste of my time. It's also a business, right? No, I'm not doing this. Yeah, don't get me wrong, but, well, look, if I thought that way, I would do it differently too. Okay? So for me to live a meaningful life, Burned, I want to teach and share. Okay? If I wanted to make a lot of money, I would not be giving trading signals to a bunch of retail Forex and crypto traders. There's just so much more money in just running a fund. Right? You see what I mean? Like, so when I'm done here, I work with hedge funds, right? Like, right? Like, just even, what was it, last week or this week? I can't even remember. We're talking to clients worth millions and millions and millions of dollars, right? Like, selling retail people trading signals is just the most ridiculous thing and boring. So, no, I'd rather just teach and hope I can see a few people flourish. But yeah, sure, there's money in it, but it costs money for me to run the services. So anyways, so I'm just trying to get to the heart of the matter, the point. I want to teach. I want to share. I want to give. It makes me feel good. It's a contribution to society. Okay? And if you track my career all the way back, as far back as NASA, I've always done something to share with my community. So the 20 years I've been doing Forex, that's one thing. But even further back in my years as venture capital and high-tech entrepreneurship, I was doing something similar. I've always contributed back to my community. And even before that, I worked a nonprofit. Okay? So anyways, so there you go, right? So anyways, there you go. Burn says, I don't know. Okay. Yeah, well, thank you. That's it. So anyways, I don't even know how we got there. We were talking about other gurus and stuff like that. Yeah. So I'm sure. So Bernd, let me know. Like, I'm not knocking that down. I'm interested. I do want more and more people to follow our community because I believe we do contribute positively to the trading community. I would like to make a difference to more people. Sure. So anywho, yeah. Right on. Thanks, Bernd. Appreciate that. Cool. So anyways, it's the right price, but not the time to buy. But you could look to sell, and you would do that by now dropping into a smaller time frame, even a 5-minute chart. Okay, 5 or 15. 15 says it's way too early. So what the 15 tells me is up and then down. Okay, that's what it says. Oh, Byrne says, okay, only a few of them want signals and the others are eager to learn. Awesome. Okay. Remember, I started FX Bootcamp when I realized I needed to surround myself with like-minded, driven people. So I think that was 2004 or 2005 or somewhere in between, right? 2004 and a half. I can't remember. And I realized my previous track record of success in life was based on ask myself, why did I have levels of success before? Okay. How did I get there? And I realized most of the time, other people were contributing to my success. I couldn't do anything on my own. Well, I could do everything on my own, but a key component is being surrounded by other like-minded, driven people. And as a Forex trader, I didn't even know another living soul focused on Forex. So I put it down in my business plan. Yes, a real written business plan. Yes, with a 3-year pro forma cash flow statement, everything. A legit business planning retreat. It was probably 4 or 5 days at the Ritz-Carlton, real money, and real planning, real effort, real thought. And so in my strengths, weaknesses, opportunities, and threats section, I'm like, okay, I'm doing this all by myself. And this is a real problem. I'm not surrounded by other successful, driven people. So I asked myself, how do I find other focused, driven people focused on Forex? This is a real question. I remember doing it actually on this particular room was at ground level. This is a Ritz-Carlton in Half Moon Bay, California. And it was it had a room that had a ground level patio with a fire pit. Because even on a sunny day, you need a fire pit. Even in the summer, you need a fire pit. So I'm sitting by the fire pit thinking about this. Okay, I need to find other Forex traders. Oh, thank you, Maida. Thank you, Jim. Thank you. Goes in the wine bottle. I have a specific wine bottle that I plan on buying. It's the Behringer 2013 Private Reserve Cabernet Sauvignon. Yeah. $200. I'm going to buy it and I'm going to keep it. All right. I'm going to keep it for a decade. Yeah. Anyways. I remember sitting there going, all right, I see a threat. I'm doing this by myself. And I know every time I've been successful, I've been surrounded by focus-driven people. So I need focus-driven Forex traders. I need to find this group, and I need to find a way to convince them to hang with me. So I'm sitting there, drinking scotch, I'm smoking a cigar. Not a lot's changed in 20 years, huh? And I'm like, this is serious, guys. Like, I'm really doing this. I'm doing this planning retreat. I had an agenda and everything. So I'm really sitting there, drinking my scotch, smoking this Monte Cristo white label. I actually remember the cigar. And trying to figure out how I need to find focus-driven Forex traders. And I think about it. And I think, okay, I need to put this in my business plan. How will I do it? And here's the two things I did. One, I said, well, I only know one Forex website, FX Street. So I contacted them. I want to teach at FX Street. Non-farm payrolls I've been doing for 202 months. My first presentation before that was probably 6 months to 8 months before that. So let's just say 210 months ago, I contact FX Street and I'm like, I want to teach. Okay. The second thing I did was I went on eBay and I wrote a report on how to trade Forex and sold it for $1. And in that, I said, I'll give you a 1 hour consultation for free. That's what I did. I just needed to be around focus-driven Forex traders. That's it. And I just met people. So it's about the community. Okay. Coolio. So going back to this, those are kind of the two plays if we go out to the hourly now. Bulls and bears. Okay. So thank you for being in my community. And of course, it's not my community, it's our community. Thank you for being in our community. I believe we make the world a better place. And I appreciate that greatly. So anyways, look, euro dollar came down. Oh, sorry, it hit my little box and stopped. Okay, we'll take a look at that. We'll do several cryptos today, Bernd, if you want. I'm fair. I'm actually kind of neutral on everything today. Like I've gone cold shoulder until we get closer to Wednesday. Okay. If I'm taking shots, it's because I'm just trying to get into sort of a front run. But today is quadruple witching as well. So there could be strange and unusual activity. I'm just not that eager today. I'm eager to get myself a bowl of pho. But anyway, so there's the sell zone, and that little thing was the buy zone. Okay. Okay, so that's the one. We've done that. Okay, kitty cat is rising. Okay, I'm a bull on this. The basic plan was this today. And, you might have traded it off of this rollover. Sure. And now it's gone. Now it's gone. Okay. Okay. So now maybe it's trying again, or maybe you're not even in the market. That's great. Okay. You just leave. Fine. Let's take a look at crypto, because Bitcoin specifically to me represents risk on or risk off. And there's risk on. Okay. Richard says Aussie's been ripper strong today. Yep. Maybe partially due to the change in the reserve requirement ratio by the People's Bank of China. Oh, thank you so much, Maida. I appreciate that. You're very kind. Thiago, the NASDAQ would do better than S&P with a risk-on scenario. The idea that the Fed can't raise any money. In fact, as we talked about yesterday, the market is pricing in a rate cut as soon as the next couple of months. And that would be very beneficial to companies that are not profitable. And so that would benefit NASDAQ a lot more. But I'm not quite on board yet with that theory, but that's why they would benefit from that. Yeah. All right. So I want to start with Biddy. And as far as I can see, Bitcoin will not get to 29,000. That we're at 27,000 is the likely top. Slightly more, 20,250. But more, I think what'll happen today at market open is you'll get a pop and a drop. So it'll open green and end the day red. Well, you already know the answer is the yearly target. But if you want to do it again, sure. So easy. When everybody's trying to please me, baby. It's so easy. Nothing to please me. It's all right. When we fade into the night. See, we already know this answer. according to this chart, if you're a bull, the bottom is 16,000. Of course, we already knew that. Nothing new. And the projection is 48,735 and 70 cents. About, roughly, as most people say. If you're a bull, not a problem. Bumpy says, what if the Fed does a 50 basis hike? Well, we did the math yesterday in the swing trading group, and there's 0% chance of that based on the math. So, extremely unlikely, Bumpy. But based on that question, viewers, I think you should join FX Bootcamp and our community, because we literally went through it yesterday. And it's not that I just tell you. No, we spent, a half an hour? We had an open discussion as a group. We had an open discussion talking about it, talking about the psychology of it. Why wouldn't the Fed do it? Why? Maybe the Fed should go 50 basis points. But what would be the negative consequence if they did? But what would the consequence be if they paused? And what's the psychology of the Fed? And if they did that, if the Fed explained it in one way, it could be good news. But if they explain the pause in a different way, it would be bad news. So it's not cut and dry if they paused, if it's good or bad. And we discussed that. So we talked about the psychology of it. Again, not me lecturing. We talked about it as a group. An open conversation amongst peers. That's how the swing trading group works. Okay? So, it's a good question. You should really understand central banking, for example. So that's why I have a course on it. But then you should understand, the psychology of a market related to it. Yeah. Bumpy says it's unlikely. No, it's 0. Right? It's stronger than unlikely. No, 0% chance is what's priced in. Now we know that there is still a chance the Fed goes by 50 because the Fed could do whatever they want. But we know that that is not priced in, and that would be shocking. The Fed would know that would be shocking. So it's a self-fulfilling prophecy. Do you think the Fed wants to shock the market by making an aggressive move that nobody has priced in? Probably not. Yeah. Okay. So anyways. So going back, the target, as I highlighted, is there. If you are not a bull, then this 27,000, we'll call it, is incredibly important. 33,000 is incredibly important, and 38,000. And they all just mean different targets for the year. Okay? So if you think the second half of the year is going to be bad, then you could say, how about this to that? Okay. So come with me. Don't ask me where, 'cause I don't know. I try to please you, but it don't mean. So anyway, so there's your biddy. Bitty, 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 can't you see? Sometimes your trades just hypnotize me. Okay. All right. ETH. Okay, working its way up. Not really riding that moving average. And probably, let's take a look at this one. Boom. So we might be able to climb on board the daily 21 if you're a bull. So a basic standard operating procedure here is a version of this. Okay. Now, what you might choose is to let it breach first and then grab the pullback. That would be risk on. It's a nice day to trade Ethereum. Wow. Okay. Anyways, like that. What do you think? David says, I really want the dollar to rise. Whoa, be careful of the language. Be careful. I don't mind the dollar rising idea. The really want part, it leads to bad behavior, or poor behavior, we should say. Okay. Yeah, I agree, Bern. But I think what's happening. Okay. I have to go so far back. Hang on. Let's see. I might get lost in talking this out. Let me. I try to please you. Don't ask me because I don't know. All right, I got to go to pro on this one. So I go to bonds, 10-year T-note. And there's a huge crash in yields. What does that mean? That means money is coming out of the markets and going into bonds because the market believes the Fed is going to pause, maybe even cut, that 4.2% on the 10-year T-note. Look, we were over 4 for sure. So now people are like, all right, the Fed's near the end. They're going to pause. This is all about the sensitivity in the banking system. So they're getting money out of other projects and putting it in the 10-year T-note, creating a bullish rally in price, dropping the yield. So people are now taking money out of things and putting them into other things. And there is a shift in psychology happening. So it all starts with the bond market. Right now, okay, 68.5% of investors, right, are bringing this down. Anyways, so money is moving, and it's changing the direction of some of the flow. But it also means people doing it might be wrong. Or we are getting closer to a change, that locking in 4% might be good. See, you wouldn't buy the 10-year T-note at 4 if you thought the 2-year was going to 5. And you would think the 2-year is going to 5 if the Fed is going higher than 5. So then, wait. Let's back that up. If the Fed is going to 5%, which they will next week, then the 2-year should be paying higher than 5. If you can get 30 days at 5, wouldn't you take 2 years at 5 or more? Okay. So why are people locking in 4? Some of those bond yields, treasury yields, have come down 0.5%. That's a lot, bro. So people are locking in because much of the market believes the Fed is going to stop. Now, who buys most of the treasuries? Well, it used to be China and OPEC. That doesn't exist anymore. I've proven this, again, to the swing trading group, which includes the day trading group. Well, day traders have access to both. So anyways, we're all there. And I did this maybe 6 months ago. I showed everybody the treasury flow and that China and Japan and OPEC and the UK were the biggest purchasers of U.S. treasuries. That is no longer true. We've ruined those relationships. So somebody else now is buying treasuries. Okay? And I know who it is. But anywho, why are they locking in 4%? Well, to understand that, you have to understand who is buying the treasuries. Does anybody know? Not China? Not OPEC? Who's buying the treasuries? Who's locking in a 10-year T-note at 4, and more people piled into that trade? So there's a bond market rally and a drop in yield. A lot too, like a lot. We're talking trillions of dollars. Who is the buyer of these? Thank you, Bernd. Exactly correct. The banks. This is what third world countries do all the time, isn't it? The government forces or incentivizes their own banks to buy their own crappy debt because no one else will buy the debt. Therefore, the government can't survive. So I think American banks are loading the boat on treasuries. And then I pull up the Fed Fund Futures, which tracks the flow of capital. And what are they doing? They're pricing in a pause and a rate cut, which means you better lock up a bunch of treasuries. And so they're locking in 4%. But I'm eager to look at the summary of economic projections, which I believe will indicate that interest rates are going to go to at least 5.25%. At least. Probably 5.5%, probably even closer to 6%. Which means all these trades that are happening this week, again, going back to this, okay? Beginning of March, we're at 4%, and it's been falling ever since and projected to keep falling. Okay? Which means everybody's piling in, buying. Banks are buying. Then I go look at the Fed Watch tool, and I see why, because they think the Fed's not going to raise any higher, so that's going to be peak. But then I look at the data and project that this could go a lot higher, which means all the bonds they just bought are going to lose money. Okay. Although you can see typically, so the period of January to February, bond yields are supposed to rise, and they did. from February to March, bond yields are supposed to rise, and they did. And then to April to May to June, July to August, they're supposed to fall. So maybe it's just seasonal. But I got to think forward, and I need to know what the Fed is doing. Okay. So what does it mean if bond yields are falling April, May, June, July, August? What does it mean? Well, it means the bond market's rising, which would mean the stock market is falling, which means the dollar's going to be strong, which means gold is going to come down. But what's being priced in today, guys, across the board is kind of the opposite, that the Fed is going to have to stop because they finally broke something. And because they broke something, in this case, the banking system is sensitive to the level of interest rate hikes. So the Fed stops, but we still have high inflation, 6% inflation. The Fed cannot raise anymore. So from here, we're going to have inflation. Okay, what do you do in an inflationary period? You buy commodities. Okay, so if we're going to go into inflationary period because the Fed can't create any more disinflation, then you buy gold and you buy Bitcoin, for example. And probably wheat and a bunch of other things will go with it. Okay? So that's what's going on. So when I show you Bitcoin, that's the story you should see on your chart. That the Fed is going to pause very soon. So maybe what they do next week is they say they are very, very, very sensitive to current market conditions. So they are hiking by 25 basis points, but they have serious concerns, which tells the market they're probably going to pause. And then they go out and they do a bunch of speeches throughout March and April, telling us the sensitivity of the banking system and the impact of raising interest rates really, really, really fast, which is more preparation and education for the market that the Fed is going to pause. If that occurs, Bitcoin will go up and gold will go up because it's the end of disinflation. See, this is disinflation, and this would be like reflation, if you will. Now, I don't think it'll be reflation because the supply chain part of the equation has been fixed. So we're cool with that. But it's the lack of disinflation. If the Fed's not raising interest rates, if the Fed stops doing quantitative tightening, then it's less negative. You guys remember this from 7th grade? Okay. Positive is positive. Negative positive is negative. Positive negative is negative, but negative negative is positive. So we get ourselves into less, which is good. Okay. No, it has nothing to do with the 25 basis points, but yes, I think there could be, or what's being priced in, is the idea that the Fed raises by 25 basis points and then hints like crazy a pause in the next meeting. That's what's being priced in. So if they do that, then I have to adjust and say, do not buy a bond. Don't buy a bond, for crying out loud. Why would you buy a 10-year T-note? So let's say you buy a 10-year T-note today at 3.5%. Why would you do that if the Fed stopped raising interest rates with 6% inflation? Core inflation. Well, to get that, they say, well, take out food and energy. Well, which means you should probably buy food and energy futures, right? So you would never buy, like, this is dumb. You would never buy a treasury at 3.5 if you expect a long period of the Fed not being able to raise interest rates and inflation going back up. So if that would be a lack of disinflation, so you would buy Bitcoin and let's say you would buy gold as two examples. Okay? I know I'm getting a little esoteric. I hope it's okay. But we're trying to think through what other professional investors are doing with their capital and their mindset for making those decisions. And remember, none of it is kind of written down in English. You have to look at the math and figure out, well, what would cause that? This is behavioral finance that I'm trying to show you. Because I believe ultimately that is your value creation. Okay? But I don't think the other YouTube gurus are that thoughtful. Maybe they are, maybe they're not. I don't know. But you have to understand the why behind the market. And that's how I read all of this. So if there's risk on, would you buy Ethereum? Yeah. Now, why would there be risk on? Well, if you got 6% inflation and the Fed can't protect you anymore, well, maybe Ethereum goes up 10 or 20%, maybe 50%. You're like, yep, let's get on with it. Also, what does it mean, inflation? Okay, it means the value of the dollar weakens. So if Ethereum did nothing and the dollar fell by 6% because inflation rose by 6%, that you should make money on Ethereum if people want to put their money there instead of the dollar. Okay? So anyways, let me kind of clear this chart up a little bit. I want to roll this up and really play the next move as the more important one. So I already did this for you, so you already have that. So the next one would be, actually, let me do it in the same fashion. Some of these currencies I thought would do better for hackers. When there was a story where the government claimed they got 50% of the money that was hacked from a U.S. energy company. You know, that so hackers broke in, I forget the name of the company, but I think it was an energy company. They hacked like millions of dollars from their account. And then about 3 weeks later, the government came back. They're like, we hacked the hackers and we got at least half the money back. I'm like, okay, well, that was all in Bitcoin. So I said, well, from now on, hackers are never going to ask for, ransom in Bitcoin. They're going to do it in Solana or what's the other one? ADA. Because it's harder to get that type of information from those ones. So I'm like, oh, well. But look at this technically. It seems to me, at least on this hourly chart, there is a change in direction. Okay. Okay. Now, if you don't trade crypto, if you don't trade, ask yourself, are the tools working? Okay. Well, if you know what this tool is showing you, the market's bearish, clearly, and all these green zones are buy zones, but above the green zones are pink zones if I just change my indicator. So you should know that that's the sell price, that's the sell price, that's the sell price. And basically across the board, they all work, right? Just sell at the high part of the green, sell at the high part of the green, okay? But here's the thing. The projected low for ADA this month, okay, was between that number and this number. The target for that week was between this number and that number. So combined, okay, this is the conservative sweet spot right there between the conservative weekly and the conservative monthly. And so when you look at this, remember, we knew at least the first number when we were way up here, actually even before that. So what do you think? Are big institutional investors using the tools that I teach you with? It looks like that to me. Okay. Oh, yeah. And then I look at like these numbers. Okay. Okay. Look at this. Like, it looks like they're using both weekly and monthly pivots. Yeah. Yep. So this might be another one, another play. If you think the Fed raises by 25 basis points, so you get down, and then they hint that they're going to pause. Okay, you like the ADA? Okay. This one's done better, however. Let's back out a little bit, kind of put a similar logic. Let's start with yearly. The yearly projection, if you're a bull, this is the projected low for the year. Only if you're bullish. So if you're a bull and you believe the crypto winter is over, that is an extremely meaningful price. And if you're right, you're going to 181. Let's just say $1.80. Be conservative. So you started this journey at 10. The market's doubled and we're at 20. And you're going for 180. Holy schnicker schnocker. So, okay. So going from 10 to 20 is 100%. 20 to, right? 20 to 30, another 100%. 20 to 40, another 100%. 20, 50, oh my God. Oh my God. Magnitudes. 20x. Well, 18x, of course, from the bottom. 9x from our current price. 900%. Which is, well, beats inflation, don't you stink? So now we're kind of in a neutral zone. It's not a good buy or it's not a good sell. Okay. So you want to look at this price, and we'll drill down in a second. And you want to look at this price. Okay. Let me try to get that as accurate as possible. There you go. Let's get out of a daily. Let's drop into an hourly. And now you are on that key pullback price. We call this the roll reversal. Okay. And now you kind of rinse and repeat, where now you have the higher high, higher low. Okay. So 16 or 15, more like 16 was a good look at it. Then you had a chance at 18. Now we're at 20. But 20, and you're going for what, 25? Oh my God, I made so much money on Solana. I bought it at 18, got it at 25. Or are you going for 180? Well, you might need to stay in that for a few years. Yeah, so what? Just buy it and consider it a long-term illiquid asset. Especially if you just jam your stop at break even. Okay? I'd like you to have a few of these in your portfolio, especially crypto, where you're like, well, I bought it at 18, it's now 25, I'm going to jam my stop at break even. Okay? Never going to take it, 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 never going to take profit. Okay? Wouldn't hurt, huh? Sit in it for a couple of years. Okay? Bern says, yeah, I doubt it'll go that high. Well, here's the thing, though, right? Here's the thing. I'm threading together a lot more than this particular asset, although I did study it a bit, and it is an improvement on many other things. Like there are use cases for it, so don't get all caught up in that. What I'm saying is this is an alternative investment that might make sense in a period in which we may be caught up in 6% inflation indefinitely. And in particular, it might last 10 years and we go into a lost decade. Why? Well, we got crushed by COVID, and the federal government was negligent in their level of stimulus to buy votes. Okay, that was politicized, but that's how I think about it. Yeah, I think they bought votes by pumping money into the market. Okay, great. So, great. Then the Fed was negligent by waiting way too long to raise interest rates and stop quantitative easing. I mean, remember, they were raising interest rates and doing quantitative easing? That doesn't even make sense. So now we have a negligent government and a negligent central bank. And based on our negligent foreign policy over the last forever, is it possible we go through a lost decade? Uh-huh. in which we have a slowing economy and high inflation. Yeah. Well, go back to the 60s and 70s. We had a negligent central bank run by a non-economist. Jay Powell's not an economist. Arthur Burns wasn't an economist. Everyone else to ever run the Fed were economists. So the last two times, the only two times we've had a negligent Fed, they were run by non-bankers, non-economists. Well, what an amazing coincidence. We also, in the 60s and 70s, had an incompetent government. In my opinion, if you analyze Richard Nixon, he was so unbelievably, incredibly incompetent that he was actually removed as president of the United States. But the negative impact on that was beyond what most people even understand. They're like, yeah, he lied and he cheated. Oh, it's more than that. He's the one, based on his decisions, that led us to the Middle East doing their oil embargo, which quadrupled oil prices. And what most Americans don't know is the Soviet Union was already on the brink of collapse by the time you're reaching the late 60s. Brink of collapse. The end of the Cold War. But Nixon's incompetence, which led to the oil embargo, which led to quadrupling in prices, saved the Soviet Union by quadrupling the amount of money they were making on oil exports. Nixon's incompetence led to another 20 years of Cold War. Trillions of dollars wasted, millions of people dying because of one man's incompetence. Oh my God. So, anyways, could we have 10 years of sideways for the United States of America? Yeah, yep. I think so. Stock market moves sideways. Inflation is persistent. And what are you going to buy? Well, if that narrative is correct, like you might disagree with me and I might even be wrong. I'm not saying I'm right and I'm not saying that's going to happen. I wanted to paint a picture. I want you to think about that whole thing. Could we have a period of 10 years of mediocrity? And if that is a possible, even if it's unlikely, but if it's possible, how would you know it's happening? And how would you position your retirement account? Are you prepared for a lost decade? Many money managers think we're going to go right back to where we were. Stock market's going to rally, Fed's going to cut, we'll do quantitative easing, everything's going to be golden. Well, things are a lot different, especially if China's not buying our treasuries and all the banks are holding treasuries. Wait, the United States is monetizing its own debt. Oh, God. Okay. Well, so you guys are asking good questions. I want you to think about it. But what would you do? Richard says, own material stocks and energy. Wait, I've been doing that now for 6 months. Oh, God. I've already started that process. Just in case. So going back to this, if we have persistent 6% inflation, where do you put your money? Okay. Do you want bonds that guarantee you 3% if you are guaranteed 6% inflation? Well, it's got to be the dumbest thing you could possibly do. But it's the only thing banks are allowed to do. Okay. So I go back to this. I don't know anything about this. I know it's a cryptocurrency and I know it's a half decent one. Great. Will all of this as an asset class go up or down in a period of persistent inflation? And my answer to this would be probably up. Probably Bitcoin and Ethereum, but ADA and Sol, pretty good. Litecoin is cheap. I don't know about Ripple. I can't even buy Ripple yet. Well, I don't think that's changed. Where's my XRP? XRP in Cincinnati. Where's my XRP? XRP. Not here. Interesting. Why would they put it differently? Where's my XRP? XLM, XRP. Yeah, not allowed. No Ripple. But anyways, a lot of you guys do track this, so I have it up there. So as an asset class is how I look at it, okay? If you don't want to be in dollar, you might want to buy Bitcoin. You see? Okay. So now let's move to a different asset class, which is also an anti-dollar, XAU. And gold is up. Okay, we have it going to just shy of 2,000. And that's the thought process behind all of this. What if the Fed is near the end because things are broken? They pause, they end the rate hike cycle, and we still have inflation. Do you understand? The narrative there is this is disinflationary, this is inflationary. If you go further back to last year, the Fed raising interest rates killing inflation, seasonal rally, the Fed raising interest rates higher, but now maybe done. That's the narrative. So if you think they are done killing inflation, then the killing inflation ending is a new regime of living with high inflation. So you should be in gold. I stopped selling gold, a week and a half ago? Okay. I was selling gold to pick up the carry. But now you might want to be in the inflation trade or reflation trade if it's easier to make that concept. But it's not reinflation. Reinflation to me would be something like the commodity chain, supply chain, being constrained and therefore those prices go up. But I think what you will see is, for example, I guess I have to have it under metals. Like even things like palladium go up. We don't have that yet. If I had grains, I would look at, wheat. If I had copper or iron ore, I'd look at those prices. Yeah, it's too bad we don't have any of those. You'd probably need a commodities broker. Too bad. So sad. I'm just sort of like hopingly looking. Yeah. Okay, so you want to look at things as an aggregate, in my humble opinion. Sort of like the way I look at the cryptos that I chose to look at. I'm not looking at them like ADA versus SOL. Which one's better? I'm looking at it from a macroeconomic point of view. Will crypto be attractive relative to the dollar for those trying to beat inflation with persistent inflation in our economy? So you almost create a basket, if you will. You buy them all, or you pick the one you like any given day. Thiago says, what do you mean by mediocre? Well, how about this? Over the period of 3 years, the stock market drops 10%, rises 20%, drops 10%. Where are we at the end of 3 years? 0. So you go from negative 0 to negative 10 to 0 to plus 10 back to 0. All in the course of 1,000 days. Now, the interesting thing is over the last 10 years with quantitative easing, a lot of people have moved over to passive investing through indices, which makes a lot of sense during quantitative easing. I totally agreed with that. Since 2008, I've favored simply buying the S&P 500. Best investment you can have ever made, in my opinion. And in that period too, long QQQ, being long NASDAQ, made a ton of sense. Tons of sense. The Fed's doing quantitative tightening. The Fed has raised interest rates, so there's no free money. There's no quantitative easing. And I think for everyone that's still in their passive investing regime, have made a mistake. I think now you can beat the market. I think during the free money rally, beating the market was even irrelevant. Like, what do you mean beat the market? The NASDAQ's up 22%. Like, who the hell cares if you're up 28% if you're taking lots of risk? You're like, I can do nothing to make 22. Why should I pay some hedge fund manager 20% of my profits if I could just live at the QQQ? Like, so easy, right? But if the stock market's not going anywhere for 5 or 6 or 8 or 10 years, then you will need help beating the market, and you probably don't want to be in the passive. So I'm building strategies. And if you got $1 million, I can hook you up with some ideas and some friends of mine. You know, I think if you can earn 20% a year if the stock market is basically flat, so if you can go 3 years and the stock market goes down 10%, up 20%, down 10%, so 3 years goes by and you haven't made any money, making 20% per year and compounding that every year, all of a sudden you're up 75% in 3 years. Well, everyone else ain't doing jack. So that's when you need a hedge fund manager. That's when you need a real wealth manager. Not your Uncle Billy, who used to be accountant, but his accounting business went belly up because he sucks as a business manager. So he decides to work for a big wealth management firm because they gave him $60,000 a year job for 2 years. And he talked to some rich people, convinced them to invest money, and now he sits on that, but he doesn't know anything about the stock market. He just used to be an accountant. And so they just sell you some product. And right now they're probably selling you the S&P 500, which was the right idea 10 years ago, but back then they were selling you hedge funds, which was the wrong idea. So the wrong idea now would be buying the indices. Why would you buy the indices if they thought they were going to go nowhere for 10 years? And again, why would they go nowhere for 10 years? The Fed's doing quantitative tightening, not quantitative easing. The Fed is raising interest rates, not keeping interest rates at zero. So if those two policies, ZIRP and QE, led to 20% year stock market increases, if they're doing the opposite, couldn't you also argue down 20% per year? Well, to be safe, definitely not up. So my question is, if the economy just treads water, and we've seen the worst, and the Fed now is just going to tread water, then how are you going to play it? But then what if it gets worse? What if more banks continue to fall? It becomes systemic. Contagion happens. Are you positioned to benefit from that, to protect your losses somewhere else? Or are you just chasing price and you're long only and you think we go right back to where we were? I don't think we will ever in my lifetime go back to where we were. You might recall late 2019, maybe early 2020, in the very early days of COVID, I said, load the boat with this cheap money that's still available. You will never, ever, ever see this cheap money ever again in your lifetime. Does anybody remember that? I know some of you actually took my advice. Anybody remember that? And that cheap money's gone and it ain't coming back. That was your last call, your last warning. Bumpy says, Wayne, does this mean you're not US dollar bullish anymore? Well, depends on what happens on Wednesday. Right now, I think people are guessing, they're projecting, they're analyzing and making calls, but ultimately we don't know yet. But on Wednesday, we're going to learn something new, and it will be important. So I will cover it live on Wednesday. All members of FX Bootcamp, video members, swing trading group members, day trading group members, I will do a live stream. All members of FX Bootcamp are welcome to join. We'll watch it together, and I will do my best to interpret what's happening. While it's happening, I will talk over Jay Powell. And if you want to watch ADA, great. If you want to watch Palladium, great. If you want to watch gold, great. If you want to watch Bitcoin, great. If you want to watch, pound, dollar, pound, yen, that's great. What about oil? Yeah. Okay. But what I'm trying to share with you today is, as a trader and investor, you should have various models ranked by probability, and create contingency plans for each. So, if the Fed pauses, which nobody, low chance of that, but they could do it. But more realistically, hints that they are thinking about pausing. What will be the consequence of that? And how do you make money in market conditions like that? And you should be able to plan the next 6 months based on that one thing. Okay? If they raise 25 basis points, but have hawkishness or dovishness in their press conference, how will that impact the market? What will your trades be in them? And then, of course, if they raise 50, what's the impact of that? Now, that's not likely, so you only have to do that one. Raising, but having a hawkish or dovish, so that's 2. So now we have 3 strategies. Pausing or hinting a pause. And pausing or hinting of a pause also will rely on hawkishness or dovishness in their statements. So you got 5 scenarios you need to plan. All goes be working overtime. Well, most of them are vol trades and counter trend trades. So whatever. The thing about that kind of stuff, Bumpy, is you make some money really quick and then it's over. There's no long-term value to it. Okay? Okay? It's like giving an unemployed person $100. Oh, thank you for the $100. I really needed this. Then they go out, get some food, get cleaned up, maybe buy some clothes, and now the $100 is gone. Now they're hungry again. Great. Hasn't solved much. It was helpful for a bit, but it didn't solve much. What that person needs is a job. And that's the difference, right? So as far as the trading and investing, some algos trading the vol on the news event is just short term. It's like, okay, great. So somebody made $100. Great. I'm much more interested in the resulting trend. Okay. Now this palladium, you guys might recall this. Okay. I shorted in here and held it to here. And that's a lot of money on palladium. So this might be regrouping here. And I look at palladium and the target is down, okay, 1,200. We're still at 1,400. This is worth a lot, and it also pays you a high carry. So I can show you palladium. Palladium. Ba-ba-da-boo, where does it go? Where does it go? Doge. No. Okay, palladium. Specification. Huge swap if you're short. But here's the thing. Each little tick is worth a lot of money. I think when you pull the trigger, just the spread is $100. See that little spread right there between the 2 lines? That's somewhere between $100 and $150. So if I'm saying we're going to go from 14 to 12, that's like a couple of $1,000 on a mini lot. Oh, God. Okay. Which makes me think I probably shorted this one. I probably shorted here and got out here for a couple of $1,000. I think it was $1,500. Huh? From there to there, 1,500. Boom. Boom. Okay. So if you get it right, you get it really right. So gold going up as you would expect. I'm not sure why palladium's going down. That's always very interesting. Silver going up, that makes sense. Okay. And platinum, XPT, platinum going up. So everything going up, just not palladium. Well, I guess if we go in recession, you need less palladium for your your cars. Platinum, I think, is used in catalytic converters, but I think palladium is used in batteries and other components of EVs. So I don't know. Oh, so I'm tired. It's 9:30 in the morning, 10 o'clock in the morning, and I've already had a long day. Big day ahead as well. So I'm gonna go. Okay, I'm gonna go. Pray for Credit Suisse. Pray for Truist. Yeah, I need some love. Truist down 4.5%. Oy vey! No! Well, I guess that's why I'm hedged. So anyways, yeah. So peace on earth. May the pips be with you. May your profits be above average. And thank you for being in my life. I think it's necessary for all of us to be surrounded by driven, focused, like-minded Forex traders. I think we're good for each other. And I'm glad to share. I'm happy to share. I hope it gets me into heaven. When I need to play that card, I'll say, well, I was a jerk from time to time. Didn't manage my relationships very well, but I tried. I cared. Worked really hard. And I gave back. As soon as I was a young man, I started giving back. And kept giving back. So can I get in? So when I was in my 20s, I was on a board for a big nonprofit, worked my way to the top of the leadership executive of the corporation, sat on the board of directors and oversaw thousands of people. Then I went to Silicon Valley and I helped people raise venture capital for their young high-tech startups. I helped people raise millions of dollars. Didn't even charge them money for it. Became a venture capitalist and started investing directly into the entrepreneurs. Cool. And then when I started Forex, it was great in the beginning. Then I ran into a challenging period and it was devastating to me. So I decided to stop trading because I was losing money. And I had just quit my dream job. So I'm like, holy smokes. So I go on the business planning retreat and I'm like, well, when I was in the nonprofit, what was amazing about it? The people that were around me. The people I were grooming, but the people that were grooming me. Well, what led to success when I was in the Silicon Valley? Investing or raising money for others. And I'm like, it was the people surrounding me and grooming me and the people I was supporting to help them find excellence. So what's going wrong with Forex? I'm not sharing. I'm not giving back. I'm not surrounded by driven, like-minded people. Right? So that's how we got here, right? Okay? You know, that's how we got here. We have a wonderful community, and it's a start. But it's our support, it's our foundation, both intellectually, but emotionally and spiritually. And from there, you can build greatness. And it's almost impossible to achieve greatness without a solid foundation of support. It's the people around you that get you there. Every successful company has hired focused, driven people that contribute to the mission of the organization. And that's what we do. It's a community of excellence, and I thank you for helping me build that. Peace on earth. May the pips be with you. May your profits be above average.